Yo. Yo. Yo, what is good? Two a.m. at work watching this. Let's go. Let's get it, Alex. Nice to see you here, man. Real dedication, that is. Let's just move the camera a little tiny bit. Yo, Mark, Eric, Blake, Matt, Rory, Catherine, Elizabeth, Louis, Free, Virgil, Amit. Hello. Success. Hey, Josh. Finally made it. Nice to see you here, man. Benyam, Free, Eric, 12 noon, 7 p.m. here. Dan, what's good, bro? How's it going, man? Janice, Best Self Babes, what's good? Caroline, final part, exactly, Mark. It is the final part. Misbah, Catherine, Oliver, Daniel, Stephen. What is good, guys? What is good? We are live. We are chilling. Like up the motherfucking stream, guys. Let's get it. Like up the motherfucking stream. We're doing a 10k funded account giveaway today. And something else at the end too. Wong Wing Hong. Hello, man. Terry. Zhao. Martin. Pietro. Ali. Mantas. Gogo. I think I said that right? John. Falva. Trade the sooner. 11 p.m. here. Late one. Just in time. We are just in time. Right. What we're going to do, guys, just for this lecture and just for this stream only, I'm going to get rid of the chat box, right? I'm going to get rid of that just for today, simply just because when we're doing these lectures, like when you can see it, like my face cam's covering a little bit already. But with these lectures, right? With these lectures, especially because it's a slideshow, the chat box is going to be covering like a lot of the text, right? Especially because it's like, even if it's on the left or the right. So we're going to be getting rid of that for just today. But like up the motherfucking stream, guys. Like up the stream. If you're ready to get started, we're going to give it a couple more minutes, right? And then we will be good to go. Couple more minutes. Let everyone join so no one misses a single thing. And then we will get started, right? As you guys know, this is the precision entries. This is exactly how I enter trades. I show you, what do I show you? I break down the entire entry model start to finish, right? Then I show you trades that I've actually took. Then I show you trades people who have learned my strategy have took. Then I show you results people have been getting from my strategy, right? And then I leave you with all that. So I not only do I show you the entry, I also prove to you that it can actually get really good results, okay? I also prove that to you. Now, let me just put my phone down here because I don't want that pinging off when I'm trying to teach the people, right? Like up the motherfucking stream, guys. We're going to give it a couple more minutes and then we're going to get started. You are a legend. Appreciate that, Oliver. Hey, Gustavo. Blake. Jamie. Let's fucking go. W in the chat. Let's get it, guys. How to catch the move before it happens. As we've broke down with all these lectures that we've done beforehand with lecture 1 and lecture 2, right? Most people are just reacting to the changes of character, right? They're just reacting to a break of structure. We've broken down why that doesn't work and the thought process behind it and how to actually call the change of character, how to call the break of structure before it happens, right? I've shown you market structure, then I've shown you how to get your daily bias. And now the final piece, the third piece, the last piece of the puzzle is simply how to get the actual entry, how to enter into the move. I've shown you how the market moves. I've shown you how to find the direction for the day. Now I need to show you the direction for the trade itself, right? This is the most important part. If you've missed lecture 1 and 2, you're fine with this anyway. There's enough information in here just to show you, like, just so you, like, there's so much information in this one slideshow that you can get profitable just off of this alone, right? And if you've watched lecture 1 and 2, that's just an added bonus, right? Hey, love from India. Appreciate that, Prashant. Dustin, what's good, man? You've been, Dustin, that's a name I recognize. You've been here quite a while, I think. The first lecture and the second lecture you've been here for. Nice to see you here, man. Right. Okay. It is now 5 past. We are going to get started now. Anyone who joins in late misses completely, right? So we're going to get started. We're not stopping for anyone, right? This is it. We're going to get started right now. Okay? So, as I said, this is precision entries. This is how to catch the move before it happens. I've just been saying, I've shown you the market structure. I've shown you how to get your daily bias. And now we're going to get started with actually entering into the trade, catching that move, making a profit, and stuff like that, right? I've been here since day one. Hey Chris, how's it going? Right, that's it now. We're going to get straight into this. Let me just move the mic back a little bit. I just shouted down it. Sorry about that. I got funded 75k in 2 weeks because of you, bro. I appreciate that, man. I'm going to put the chat right there, just here for a sec so everyone can see that. Oh, wait, no. It doesn't work. Never mind. My bad. Enough messing around. We're getting started right now, guys. So get your notepad, right? Get your notepad, get your pen. Get ready to make some notes, all right? This is high-value stuff. This is the stuff people like are bundling up for $400 just to explain, right? Just to explain it. So we're going to get started now. This is it. Like the stream if you're ready to get started. At the end of this lecture, we're giving away some funded accounts. So make sure you stay tuned the entire time, listening on every single thing, because this is going to be absolutely legendary, right? This is going to be insane. So let's get started, right? Lecture 3, precision entries, how to catch the move before it actually happens, right? That's what I'm showing you today. So let's get right into it. Now, first things first, I just want to tell you guys about myself. A little tiny bit about myself, who I am, where I come from, and stuff like that, right? So, when I first ever started trading, right? Like, the reason I got into trading was because I was completely broke, smoking weed, dropped out of college just to smoke weed, right? Like, literally, I just dropped out because I wanted to have the time off, right? I dropped out of college, smoked weed the whole summer holiday of year 11. So the end of school, I smoked weed the entire time, then went to college, dropped out, smoked weed throughout that whole time. Then I started working for my uncle as an accountant, smoked weed the entire time, like near enough the entire time, right? But then I found trading, right? And that was the start of like the upwards move. That was the start of the positive trajectory, right? Where things started to go a little bit bullish, right? There you are, trading reference. Now, I used to sit, I don't know if you can see my mouse now, right? So I used to sit, right, at my desk, broke, smoking weed, failing funded challenges, telling myself I'd figure it out one day, right? I used to be so down bad, like, honestly, I'd be smoking weed, trading at the same time, thinking I'm absolutely the coolest person ever, right? That's all I ever wanted to do, was smoke weed and trade at the same time. And then when I was able to do that, I just realized that it just made my trading awful. But my psychology was good, because I was never actually locked in. I was always just fucking stoned, right? But yeah, I used to smoke weed, broke, sitting at my desk, which, in fact, the desk that I got, the very first desk that I ever owned, right, was actually from my uncle's, like, office, right? It was from the office where I used to work. It was from there. That was where I got, it was like an old used one that no one used anymore. It was like in the loft of the office, right? That's where I actually got my first desk from. So when I got that, I'd sit there on it, smoking weed, failing funded challenges on some crappy laptop, right? Telling myself that I'd figure it out one day. But I never did, because I didn't have a clear system. And what I'm going to show you today is that system. But after blowing another challenge, right? This was like the proper aha moment that most people search for, right? After blowing another challenge, right? This was like one of the last challenges that I failed properly, right? I asked myself, what if I just stuck to the plan? Because my thought process behind funded challenges was like so degenerate. Like, I used to just think that I need to rush it because I want to get paid for my trading as quick as possible. Like, I used to just rush it, force it, because I wanted to get out of that funded challenge stage and into that actual, funded account stage. And I did the exact same thing when I got funded. I was like, right, I can get paid now. Let's take a fucking trade, and lost it, right? But yeah. So after blowing another challenge, I asked myself, what if I just stuck to the plan? It sounds like such a stupid question, but when you failed that hard and you got burnt so many times, you actually just do consider actually sticking to the plan. And that's the best way to learn things, I think. So I just asked myself that. And then what if I didn't chase it and just followed structure? So I followed some structure. I didn't chase it. I got in the right mindset, got funded, then had the exact same thought process where I was like, yes, I'm funded. Let's get it. Then did the same thing again, right? So I had to then I stuck to the plan the whole time, got paid, and that motivated me to stick to the plan from there on out. But yeah, that's a bit about myself, where I come from, right? Just for the guys who didn't know that, that's me. Now, that mindset shift changed everything, literally everything. Not overnight, but over time. I went from feeling funded to multiple payouts, full-time freedom, and now a team of students who are doing the exact same thing, right? Over $1.8 million in funding between all of my students, and it all started from what I'm about to show you today, okay? So, let's get right into it. Part 1, because the guys, the OGs, the people who've been here since lecture 1 and 2 know for a fact that I do parts. This is the first part, season 1, all right, or whatever, episode 1. Why most traders fumble their entries, okay? So before we actually build on what a good entry is, I'm going to show you why the entries you currently take fail, and why most people who even try and trade IFEGs fail. Exactly how I did with change of character. I've shown you what didn't work before I've shown you what worked, right? And that's the same thing we're doing here. I'm showing you why you're losing, then I can show you how to succeed. But for the OGs out there, you probably read that already. Who's been here since the beginning? Let's get some W's. Let's just get the hype going. Let's just get it rolling, guys. Get some W's in the motherfucking chat. If you've watched lecture 1 and lecture 2, let's get them going. If you've been here since the very start of this whole 3-part series, spam some W's. I want to see who's returned. I want to see who's come back. Let's get some motherfucking W's in the chat. This is the most important part. This is where all of your hard work, consistency is going to pay off. Spam some motherfucking W's. Let's get it, guys. Where's my phone? Keep them coming, guys. If you've been here since lecture 1, get some W's in the chat. You deserve it, to be fair. You deserve to spam that W, right? If you've been here since lecture 1, get some W's in the chat, guys. We're killing it. We're killing it live, right? OGs, the real OGs, you know what I'm saying? Perfect. We got it going. We are officially started. We are in. We are going. We've got the ball rolling. We're hyped. We're ready to learn. We've got our notepads. We've got our pens. We're ready to fucking learn how to trade, right? How to trade properly, might I add. Perfect, guys. Let's get it. Let's get it. Let's get it. So, now you can see how many people have been here since the start. How many people deserve to learn how to trade. Let's get right into it. So, quick little recap, right? Quick little recap. What you've learned so far. You've learned that market structure is just the trail, right? That's just the result of having intent. Liquidity is the target. Price doesn't trend. It cycles through accumulation, manipulation, and distribution. ERL and IRL tells you where price is going, right? Changes of character and breaks of structure show you how price has moved, right? We don't want to look at how price has moved, and I've said this numerous times. We don't want to look and go, price has already gone down. Now let's start looking for sells. We want to be able to go, price is going to go down right now, so we're going to get into the trade right now. Then when all the noobs and all the retail traders are seeing the changes of character and breaks of structure, we're already taking profits. We're already managing our trade, right? We're already going and spending the money we've just made, right? So, yeah, that's what's going on here. That's what you've learned so far. You've learned that market structure is just the trail behind liquidity. Price doesn't trend. It cycles through accumulation, manipulation, distribution. Now, obviously, it does trend. We have bullish and bearish trends, but I want you to just be delusional and just tell yourself it doesn't, because that's the best thing you will ever do for yourself. Stop seeing the trend. Just look at AMD. Just look at ERL and IRL. Daily bias is the script, and now it's time where to press play, right? You know what's going to happen tomorrow. You know what's going to happen today. But now let's actually get in on that action. Let's actually enter into a trade and catch a dub. So this is where it all comes together. This is where everything comes together, right? So the first thing I want to show you is, because I said this before, when you have the bias, you kind of already, you've done the hard part, right? You just then need to get in on the action. If you know what tomorrow's daily candle is going to do, if you know tomorrow we're going to go down, why not just sell anyway, right? The reason you're still losing is because you hesitate and miss the entry, you chase and price reverses on you. Let me use my mouse so people can follow along. And you wait for confirmation and the move's already gone. And you don't have a clear system. You just guess and take gut feel trades, right? Intuition trades, right? Most people call that just gut feeling trades. And this is the truth that nobody talks about. Without a refined entry model, none of the smart higher time frame analysis, none of that new perception of only seeing liquidity and fair value gaps makes any sense, right? You need a refined entry model. And I've said this, like we're like 5 slides in. I've said it numerous times already. I'm going to be showing you that today. So let's get right into it. Let's stop wasting time. So it's not just technical, right? The best entry models aren't just technical, they're emotional. So what you need to look at is just a little tiny bit is, I'll just wait for one more candle, right? This is what people think, and this is what it means, right? So I'll just wait for one more candle, right? I'm just going to wait for the next candle, see what happens. You're looking for that extra confirmation. And that is basically just hesitation, and that leads to missed trades. Then it already moved without me, right? It's already moved. You got fear of missing out, you jump in, or you hesitate, and then you get fear of missing out. That's a deadly combo. I used to get that. I'd used to hesitate to take the trade. Then when it starts moving, I'd get FOMO and just enter in anyway, and then just completely messed up, right? So that FOMO leads to poor timing. I don't want to chase this, right? You know, lack of system. You know what I'm saying? Lack of system. You're keeping it all in your mental and you're overthinking. That's why you need something written down telling you exactly how to trade, because if you leave it all into your mental, leave it all in your head, you're relying on your brain to be at its peak performance at the most logical, like if you leave your entry model just in your head, right, and you haven't practiced it properly, you're just leaving your entry model in your head, leaving your brain to be logical in an environment that you know is 100% emotional, right? Like FOMO, greed, confirmation, all the emotional things, you know, FOMOing into a trade, jumping into a trade impulsively, closing the trade because you think it's going to lose, right? You know, small profits, massive losses, all of that. You know this environment is 100% emotional. So why on earth would you leave your entire entry model in your own head, which you know for a fact will just become emotional the second you start staring at the charts? Because then you're just going to take emotional trades, not logical trades. To take logical trades, you need it written out in front of you, right? So that lack of system leads to overthinking, which leads to just a bunch of other shit. It's reversing. You know, I knew it. When you see price reversing, you have doubt, right? And also this one, they all kind of link in together, to be fair. It all just leads, they're all kind of just the same thing. But it's reversing, I knew it, is like doubt, right? No conviction. You're just reacting to the markets. And we don't want to react, right? We want to act and be right. I'll take the next one, right? So when you see the trade, you hesitate to take the trade, but then it moves in your direction anyway. Then you get fear of missing out. Then you start overthinking because you have a lack of system. Then it starts reversing and you're like, oh shit, I knew it, right? Then you tell yourself you're going to take the next one. Then guess what happens the next time you see a setup? The exact same cycle, right? The exact same cycle. So a good entry model isn't just technical, it is also emotional. Now, this is the only thing I'm talking about with psychology. This is the only psychology-related thing here, right? But yeah, it's very important. Whatever strategy you use, whatever entry model you use, just make sure that it's written out, right? When I first started, here's a little bit of a story. When I first started, I'm trying to see if I still have it. I don't have it. I know for a fact I don't have it. I don't know why I'm looking. When I first started, I had my entry model printed out like underneath my keyboard. It's a little bit scruffy, but here's my keyboard, right? I used to have it like printed out and then I'd put my keyboard on the top of it so that it wouldn't move. And I did that for my risk management plan as well and my grading system that I did for a few weeks. But yeah, I printed out and put it here and then I can't miss it. That's what I used to do. And that's what I recommend you do too. But yeah, it's not just emotional. I mean, it's not just technical. It is emotional. Right. Now, because you don't have a clear system, your setup isn't just the setup. It isn't even a setup. It's just a coin flip. You guess the direction, you enter on impulse, and you hope it works out. Like, you get into the trade on complete impulse, just a flip of a coin, right? And then when you're in the trade, you're probably going through all those emotions we've literally just gone over, whilst also sitting there hoping that it's going to work, right? We don't need hope. With my entry model, with a proper clear system, regardless of whoever's entry model it is, you don't need hope. You don't need hope at all. You just take the trade, go about your day, come back, and you've probably made money. Probability based, you've probably made money, right? So I still obviously trade probabilities because a coin flip is probabilities, but I win more trades than you. I still flip the coin, but I win more trades than you. Right? Why? Why do I win more trades than you? It's because I have a refined entry model. I've refined one. I have a refined one, and I have built confidence using it. So not only do you need the entry model, but you also need confidence, because I know for a fact, if I let all 141 of you guys in here right now in the course, if I let you all in the course completely for free, just gave you all access to it right now, gave you the entire entry model that I use and everything, barely any of you would succeed, right? Barely any, because it doesn't just take an entry model. You don't just need to search for an entry model. You need to actually use the entry model and get confidence using it. That's why backtesting is quite a good little trick, because you're allowed to like speed run that entire thing, right? And it took me 4 years to get an entry model, but it will take you just simply 1 hour, right? So you waited for confirmation and still missed it, like we spoke about before. The logic you tell yourself is, I just needed one more candle. If it breaks structure, then I'll take the trade, which is completely retarded. Let it show me the direction first. So you sit there and you're like watching the candle, right? I can remember even doing this. You sit there and you're like watching the candle, like, oh shit, I'm looking for sells, but this 1 minute candle is bullish, and then it flips and goes bearish. Boom, I'm in the trade. Then it flips and goes bullish again, and you're like, oh shit, I'm out the trade, right? But yeah, the result is, from all of these things, you waited, the move left without you, and now you're chasing a setup that's already gone. Okay? And no entry model, as I've said before. Like, this is very important to discuss before I go into what the entry model is. I'm showing you why you're failing, right? I said that at the start. I'm showing you why it doesn't work right now. Why you're not profitable. No entry model equals no consistency. So no entry model, right, leads to emotional entries, guessing on candles, late or early execution, no ability to backtest, no journaling process, and no true feedback loop. And you're not just throwing darts, right? Think of it like that. You are just throwing darts and hoping that they hit, right? That's basically what I'm doing, is not throwing darts, kind of, right? You're just ping, 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 hoping one hits 18, right? Now, defined entry model, what that gives you is a repeatable trigger, measurable results, precision timing, and real risk to reward ratio every single trade. It also gives you confidence because you've actually repeated the same thing time and time again. Whereas when it's all based on your mind and like inside your own head, you can't really repeat the same thing twice, right? Especially when you're emotional. So yeah, this is how funded traders scale. Precision is the gateway to size, right? When you're precise, you can then just scale up, and then you can catch a 0.1 and make 10 grand, right? You know what I'm saying? Well, yeah. Now we've gone over that. Now we've gone over all that. We can actually talk about the entry model, right? The actual thing. I think there's like a 30-second delay on YouTube, but I'll give you guys just a sec. Give you guys just a sec. Finish making those notes, and then we're going to move on to the next one. Right. So what makes a real setup? So we've gone over all the concepts. We've gone over ARL. We've gone over ERL and IRL. We've gone over fair value gaps. We've gone over liquidity itself. We've gone over daily bias. We've gone over market structure, how candles form. We've gone over the wick trick, right? So, no ERL sweep is no time context and no logic, okay? This is just a guess. It kind of even has a little bit of a setup here, but this is still just a guess, right? You have no sweep of ERL. You don't sweep this high. There's no time context. There's just no logic behind this entry, right? Then this one, ERL is swept. This is by the way, this is an actual trade that I actually took, and so did other people who trade this strategy who have course access, right? ERL swept. IFEG formed in New York Open. Entry on the retest, right? Which is the inversion. Boom, right? You can even see a little bit of my notes there. This is an actual trade I took. So that's a real setup. This is just a guess. And look at the difference in quality of like, just nice and beautifully just went up, right? Went up, calmed down, went up, calmed down, went up. This consolidated, went up a little tiny bit, didn't even take liquidity, came back down and consolidated again, and then just fucked about, right? So the 3-part setup checklist that you want, make sure you're writing this down, right? Is timing, right? Timing, like AMD, you want the right session, you want the right price, so you want timing, AMD, right? Timing, New York, London, which is a given, but you want the right timing, you want a volume window, you want an accumulation, then you want to see ERL swept, right? So write this down, and I'm going to tell you how to write this out. So 1, timing, right? And then in brackets put London/New York session, right? Plus AMD, right? Close brackets. Then 2 is liquidity, in brackets ERL/IRL, right? Close brackets. So ERL must be swept first. Once you have the time, once you have the accumulation, you want to see it ERL swept. Then you want to see IRL form, and price must seek the next logical pool of liquidity, right? Then 3 is IFEG, right? And then in brackets you could put disrespected fair value gap or some shit. Or actually put IFEG in brackets, formed during manipulation. So you want the fair value gap itself to be formed during the manipulation phase. That's the most important part, because the reason is the IFEG itself isn't like some mystical tool. Like, don't look at it like some magical tool and blindly follow it. I want you to actually understand what it means. What an IFEG tells me, and what it tells us, right, in general, is we've pushed up really quickly, right, then pushed down really quickly. In other words, we're extremely volatile. We've just faked everyone out to the upside, and now we're going to go and shoot straight down, right? So this is the 3-part setup, and we're going to break this down one by one just in a sec. So 1 is timing, 2 is liquidity, and 3 is IFVGs, right? So you want to see a nice session open like London or New York, align it with a volume window, ERL must be swept after that, right? Then price must seek the next logical pool, which is IRL. Then the fair value gap that's formed during the manipulation gets disrespected, and then that's it, right? And then that's it. Now, IFVG, I want you to understand this, because a lot of people just go for their entry model and then they don't understand any of it. And if you don't understand, if you're just blindly following a setup, one of the biggest things that's going to happen here is that you basically don't have any intuition, because you're just blindly following a set of tools, right? So you need to actually understand how they work and what they mean, because then you can use them intuitively, right? So IFEG is the trigger, not the actual setup. The IFEG doesn't cause the trade. The move doesn't happen because of the IFEG. The IFEG, just all it does is confirm the intent. Remember what I told you guys about changes of character and breaks of structure? We want to see a change of character, we don't want to see a change of character. Most people do, right? But that's just the result of intent, right? A change of character is the result of intent. If we want to catch the change of character, what we need to simply do is confirm the intent. If we can get the intent right, then we will change character. So the IFEG just tells us, or break structure, the IFEG just tells us that that's the intent. We have bullish intent, we have bearish intent if you're looking for sells, right? The real setup, the thing that actually kind of causes the move, is the ERL sweep, the IRL formation, and the session context. The IFEG is simply just your go signal. It's your boom, enter the trade right now, Here's where we're going to start just going straight back up or straight up, right? Or straight down, whatever, if you're looking for sells. The IFEG is your go signal, not the reason price moved, right? And here you can see, like, we didn't get an IFEG here. So it's not the reason price moves. It's your go signal. It confirms that intent. Like if we disrespected this fair value gap here, we would then have bullish intent, right? It confirms that. What confirms the big move is the accumulation and manipulation, the ARL being swept, and the session time, right? That confirms the big move. Now the actual intent, the direction of that big move that we know for a fact is on the way, comes from the IFEG, right? So it's like the cherry on top. Think of it like that. We have everything else, then we put the IFEG on top, boom, beautiful entry, take that and we continue up. That shows the intent, right? So here you can see, if you look to the right, if you look to the right hand side over here, right? We get the ARL sweep, we sweep the ARL, which is a given when we have a manipulation. The IRL is formed here and here, right? Now there's two fair value gaps, so you just wait for the second one to inverse. But we didn't get the inversion, right? We inversed the first one, right? And this is another little teaching point as well. You can see we formed the IFEG here, which will have faked a lot of retail traders, the R word, a lot of retail traders out. It would have faked a lot of them out. A lot of noobs, a lot of people who've just gone, oh shit, IFEGs, okay, great. Stopped watching every other video and just trade IFEGs. That's the reason they're losing. They would have got faked out by this because you can see for a fact there's an IFEG right here, right? There's an IFEG right here for the people that can see that, I think, if the screen's big enough for you. There's an IFEG right here, but there's an unmitigated fair value gap here, which you can see. We inverse this one. We form the IFEG, but then respect this fair value gap and continue down, right? So that's another little teaching point, which we'll get into in a second. But basically what I'm telling you here is the ARL, the IRL forming, the session time, and the AMD shows there's a big move on the way, which you can see happened. But the IFEG shows the intent, right? So if we inverse this, the likelihood is we would have then continued up. But we didn't inverse it and didn't continue up. That's not a coincidence. So yeah, IFEG is the trigger, not the actual setup. Now, the IFEG entry model itself, in 3 steps, is wait for the accumulation, identify the most recent consolidation, as well as highs and lows, right? Then sweep ARL and form IRL. So wait for the low or high ARL to get took, then wait for the move towards IRL, right? You are not trading the fair value gap, you are trading the reaction to it, right? Then, once we move back to the fair value gap, we disrespect the IRL. We disrespect the fair value gap, right? So, in just these arrows here, these little bullet points, identify recent consolidation as well as highs and lows, then wait for the low or the high to get took, then wait for the move back to IRL, which we should have formed during that manipulation, right? Bear in mind you are not trading the fair value gap, you're trading the reaction to it. Then we form an IFEG, which is a reaction to the fair value gap, and then we enter the trade there, right? And a little quote here for you guys, make sure you're writing this down too. Don't chase setups, let the setup build. And when it hands you the gun, that's when you enter the trade, okay? So don't chase setups, let the setup build, and then enter when it hands you the gun. When it tells you it's ready, when you're ready to pull the trigger, right? When it gives you the gun, pull the trigger. That's basically what I'm getting at there. Right, so step 1, breaking that down. Wait for the accumulation. Now, a lot of people tell you to not trade this, right? And I am 100% agreeing with them. Do not trade the accumulation. Don't enter before or during this. That's when the retail traders get chopped, right? We don't want to be part of this. But what this shows us, and I broke this down in the last lecture and the lecture before that, when we have a big move, we will then accumulate, right? When we have a big move, we will accumulate. And when we accumulate, we will have a big move. It's just a never-ending cycle. So if you see an accumulation going on, you know after this finishes, after this ends, we're going to have a big move. But when you see a big move going on, you kind of just a bit like, can I catch the end of it? Can I catch a reversal? More than likely, we just consolidate again. So wait for the accumulation, right? That's step 1. Make sure you're writing all this down, by the way, guys. Step 1 is wait for the accumulation. Don't enter before or during this. That's when the retail traders get chopped, right? Then, after that, you want to see step 2, sweep ARL and form IRL, okay? IRL equals internal range liquidity, which is fair value gaps and gaps in the market, right? So it just says gaps there. What that means is like sometimes we will have a gap up in the market. So we'll have a close of a candle, right? If you can imagine that. And then the next candle after that will jump up and then we'll have an actual gap in the market. For people who trade NQ, you'll know exactly what I mean. And then there's ERL. So internal range liquidity is fair value gaps. ERL is external range liquidity, which is highs and lows. Once price sweeps ERL, it needs to go back to IRL anyway, as we discussed in like the first and second lecture. But the thing is, we wait for the disrespect / inversion of it, okay? So we know how price works. ERL to IRL, highs to fair value gaps, then back to a form of liquidity, right? Sometimes we can take a high out, inverse the fair value gap because we had to come back to it anyway. So we take the high, retrace, but continue down, which is a reversal. And we can catch that every single time. Whereas when we then continue, so we know price right now has got to come to the other side of liquidity. But the second that it does, this is the thing. This is why you shouldn't trade changes of character. Because the second that it does go to the other side, we're going to get out the trade. We're going to be doing our thing. We're going to be managing the trade, all that stuff. Whereas all the other people, the retail traders, the noobs, they're going to be like, ah, shit, a change of character. Now let's start looking for sells. When we're already in that, we're already in the sell, right? We get out there, our exit liquidity. Then step 3 is disrespect the IRL / form an IFEG, right? The IFEG is your entry trigger. A disrespected IRL after a sweep equals clear reversal intent. And you know that. We've got to go to the other side at least. Then from there, we retrace back to the fair value gap. And if we respect that, we will continue down. Exactly what happened here. And if we go back a couple slides, see this accumulation, right? This is all the same setup. See this accumulation right here, yeah? This accumulation right here. This is that manipulation of that accumulation, right? We took out that high. We took out that high. Then inversed the fair value gap. Then continued down. I caught, this is a real trade, by the way. All of these examples are real trades that I've actually caught live on stream. But yeah, that's the 3-step entry model. Now, a bonus filter that I want you to look out for. So this is kind of like an intuition kind of thing. So when I first started, like when I first got profitable, it was great. But you know how it goes, right? You get that greed, you get that kind of, you get used to the money and you get used to the win rate, stuff like that, right? So you try and refine it. So when I first started refining my entry model, one of the things I would look for is a Marubozu candlestick pattern. For the people who know what that is, I feel sorry for you because it doesn't work, and I'm sure you can probably agree at this point. I used to look, so the end of the manipulation would be called by a Marubozu candle, right? And I would only ever look for Marubozu candles for my entry. So I stopped taking as many trades, but the trades I did take would hopefully win. And what they did was just stay the same. I just took less trades, right? So what I did then, because of the Marubozu, which is like a candle with no wicks, it's just a full body, right? It's got no wicks on either side, it's just a full candle. That's a Marubozu. Because of that, I then came up with the wick trick, right? And I got laughed at by a few people who I told this about, right? I don't know if you're here, but I got laughed at by a few people when I told them about this because there's an actual name for it that I didn't realize. I just can't, I swear, I honestly just came up with this, right? I just figured it out one day and I was like, oh shit. And then just called it the wick trick because I had no idea what to name it. So what is the wick trick? What is the wick trick? When a candle opens and has no wick on the other side, and we went over this in like all the other lectures too, but when a candle opens and has no wick on the other side, it likely needs to fill that imbalance first, right? Use it as a contradiction filter. So when it opens and has no wick, so let's say we have a bearish candle, right? We open and then just push straight down and have no top wick, right? Based on how candles form, based on the fact that like 90% of candles have wicks on either side, this is what I need you to do. Use it as a contradiction filter. Sometimes you can use it as a confluence, but look out for it, especially on the higher time frames. If you want to go short, right? If the bearish candle opens and has no top wick, be cautious because price may need to push up first, and it likely will. I've took trades against this and lost like 90% of the time. Sorry, like 70% of the time. Want to go long, if you want to take buys, if the bullish candle that you're entering on or whatever has no bottom wick, it may sweep lower before reversing. So what you might get caught in is like a stop hunt. So you put your stop loss below the candles, and then it comes and takes them because it needs to form this wick, and then it reverses once it's formed it, right? So look out for that. The wick trick shows intent, or the wick shows the intent. The wick trick shows this unfinished business, right? So now you guys know the steps. I'm going to show you the whiteboard, then I'm going to show you some examples. The same thing we've done with all the other lectures. So give me 1 sec. Give you guys just a sec to do your thing. Right. Okay, so now let's look at the entry model, right? And this is where I'm going to ask you guys the questions, right? See if you guys were actually listening. So get ready to answer me. What is step 1 of the entry model? We're going to get into some examples. Right after I finish this, I'm going to show you the examples. But what is step 1 of the entry model? What is step 1? Let's see if people can get this. What is step 1? Type it in the chat. What is step 1 of the entry model? Few mixed answers here. Maybe not. Maybe a few people are confused. Okay, I'm happy I asked this question. There's a few mixed answers here. Let's clear it all up. Give you guys a couple seconds. A few people are saying bias, and that's kind of right. But this here we're talking about the entry, not the strategy. Just the simply just the entry, right? Not the strategy, just the entry. All right, okay. So a few people are getting this right now. All right. We'll leave it here. We'll leave it there. So step 1 is the accumulation, right? And for the people that were listening along, when I say timing, I do also mean the accumulation, because that's part of the timing. You don't want to enter mid-consolidation, and you also want to enter with the New York session and London session, right? So step 1 is the accumulation. Oh, what? Why is it? Okay, that is very strange. Right, what's step 2? What is step 2, guys? What is step 2? What is step 2? Bit of a delay, isn't there, on YouTube? So I'll give you guys just a sec. Oh, again, a few mixed answers here. All right, okay. It's kind of the same thing. Everyone's right so far. Yeah, ERL, that's it. ERL sweep. And then I'll put for in brackets manipulation, right? That is obviously step 2. It's the same thing, so I'll let everyone who said one thing, not the other, off, right? I'll let them all off. ERL sweep, which is the manipulation. So step 1 is accumulation. Step 2 is ERL sweep, which is the manipulation. Now, what is step 3? Everyone should get this one right. Everyone should get this one right. This should be everyone. I don't think there should. If anyone gets this wrong, you're going to get banned. What is step 3? What is the final step of this entry model? Excuse me, I got a bit of a cough. What is the final step of this entry model? Okay. IFVG. Exactly. IFVG. So, step one. Oh. So everyone's got that right. Step one is accumulation. Step two is sweep ERL. And step three is IFVG. Okay? So let's break this down. So what does step one look like? Right? Step one, there's 3 ways this can look. So we're going to do 3 examples. Okay? It can either look like this, or it can go like slightly up, right? It can go slightly up. Or it can get something like this, where it just goes down instead. Right, so these are the 3 different variants of the entry model, okay? So step 1 is accumulate, step 2 is sweep ERL. So there's, again, we sweep ERL. Now you want it to go on the outside, so make sure you're writing this down too. When we accumulate up, you want to manipulate up as well, okay? You don't want to manipulate down. You want to do it on the upside, right? Because that's where the higher time frame highs are too. So we then sweep the highs, right? We sweep all this liquidity right here. We sweep all this. We sweep all of this. Right? Exactly. Then step 3 is the IFVG. So when we sweep the highs, we want to form a fair value gap. And then once we form that, you just want to inverse it, right? Then when we form it, so we've accumulated, which is step 1. We've then swept ERL, which is step 2, right? We've then formed the IFVG, which is step 3. So this entire thing is done. Right? And then what happens is obviously then we have our move. And just a 4th little example here. We can also obviously accumulate and then manipulate down and distribute up, right? So these are our moves. And now we can look at an example. So, part 1, or just example 1. These, by the way, these are all real trades that I have took. Excuse me. These are all real trades that I have took live on stream in front of like hundreds of people. So, we accumulate, right? We manipulate, form the fair value gap, and then we distribute down. This is one trade. These are all real trades that I have took, by the way, remember. And then the second one, right? And then the second one, which might look like a technical close for people who are in the course, but I just draw the fair value gap a little bit wonky, you can see. But yeah, we accumulate, sweep liquidity, come into a higher time frame fair value gap. Then that's the manipulation. Then we inverse the fair value gap that we formed right here, and then continue up. Simple as that, right? Closed half here, let the rest run. So these are the 2 trades that I took, right? Quick questions. 1, which time frame? So the time frame you want to trade on is the 5-minute, preferably, right? The 5-minute. That's the time frame I trade. Takes place in AMD takes place in the exact AMD manner, or is it MAD, DAM, or AMS? Or AMD. AMD. Just AMD. Boom, simplicity. Exactly, Mark. Literally as simple as that, right? Beautiful trade. All of these are took live on stream, by the way. These are actual trades I've taken. So that's that's the examples, right? That is the examples. And then we walked through a real trade. So we just walked through the trades then. Now, common mistakes. We've already gone over the timing, Mark. We've already gone over the timing, London and New York. Now, the common mistakes that people make with IFVGs, right? It's 5 things, one of 5 things, or all of 5 things, or multiple of 5 things, right? They enter before the ERL is swept. So if we get like the accumulation, manipulation, and distribution before the liquidity swept, we will then lose the trade because we've got to still come up and take out the high, right? The second thing is confusing respected fair value gap with an IFVG, which is just a complete noob mistake. Then there's ignoring the session timing. So obviously you don't want to be taking this kind of entry during Asian session. And then there's marking invalid IRLs. So once the fair value gap's been, if the fair value gap is already respected or disrespected, that fair value gap is done. Don't recycle the zones. Then misplacing the stop loss is another noob thing. If your stop is inside the IFVG, you're just offering your liquidity to the market, right? So, get some W's in the chat. Let's get this hype coming back up again. Get some W's in the chat if you can see price clearly now. Who's seeing price clearly? If you can see price clearly, let's spam the fuck out of W, right? Get some W's in the chat. I want you to break the phone screen because you're spamming W so much. Let's get some W's in the chat if you can now see price clearly. Let's spam some W's, guys, if you're hyped. Let's build up this motherfucking hype. Get it in the chat. Come on. Exactly. Exactly. Nice to see everyone spamming all the dubs. Give you all the sauce. Exactly. That's what I've given everyone. The sauce. There we are. So, part 3 is perfecting the entry timing with structure, right? So we touched on this, or we went over this in the first lecture, but we're going to touch on this again, right? So, quick little recap. Structure comes last. And I said this before. Structure comes last. Liquidity comes first. Structure doesn't cause the move. It reflects what has already happened. Most traders enter after change of character or break of structure. They see the break of structure, they see the change of character, and then and only then is when they start looking for the entry. But we're what's caused the change of character. We're what's caused the break of structure. We are the ones who changed character. We are the ones who broke the structure. By the time that the structure shifts, the trade is already halfway done, right? Smart money, us, we don't wait for structure. We create it, right? We create the structure after we've swept the liquidity. So we sweep liquidity, we form the IFVG, then we come down and change character. Yeah, we will in the next example. Now, change of character, break of structure are confirmation, not the triggers, right? The change of character shows intent, right? But not the entry. It's like the aftermath of the intent. Think of it like that too. The change of character is a change in short-term control. The break of structure, just rolled my R. The break of structure is the confirmation of trend continuation. They confirm that something is happening, but they don't tell you when to enter the trade. They are lagging. They occur after the manipulation, after the displacement, after the AMD, during the distribution, which we are already in a trade for. If change of character is your entry, I'm already managing the trade while you're starting to look for the trade entry. So if change of character is your entry, by the time you're seeing the change of character, by the time you're looking for your entry, I'm managing my trade. I'm exiting my trade. And so are like half the people who have joined the course who have this strategy, right? So now we need to talk about displacement. The displacement is the entry trigger, right? Displacement shows proof of smart money intent. It's the aggressive move away from a liquidity zone. And that's what the IFVG calls, right? So the displacement is what breaks structure. The IFVG is what causes the displacement. The sweep on the liquidity is what causes the IFVG, right? So we sweep liquidity, inverse the fair value gap, catch the displacement. Then when you guys see the displacement, that's, I don't even know, right? It's the aggressive move away from a liquidity level. It shows who's in control and what orders have been filled, or that orders have been filled as well, I guess. It comes after the liquidity sweep and is your cue to start preparing for your entry, right? If there's no displacement, there's no trade. Now I'm talking about the actual inversion, right? You can see here, a displacement candle is just a big candle in one direction, right? I'd say this is probably a really good example. This is a good example as well. So you see we accumulate here, we then manipulate up, sweep the liquidity, form a fair value gap, displace through it, so we have a displacement inversing it, right? And that's what gives us our entry signal as well. So it's like a displacement / IFVG. You want the IFVG there as well though, because it shows that real volatility. Right, simple as that. Simple as that. So the entry sequence that you want to be looking for now, the entry sequence is the flow that gives you precision. Number 1, liquidity sweep. Number 2, displacement move. Number 3 is the IFVG that forms from this. So I guess you could say they're the same thing, right? So I guess you could say they're the same thing. Okay? Simple as that. Now, let's look at a chart example of a displacement IFVG very quickly. Again, this is another trade that I have actually took, by the way, not just some cherry-picked example from like last night. This is an actual example of a real trade. Right? So, this is obviously on a lower time frame, but if we look on the 5 minute, we have a clear displacement here. We have no top wick on the 5, push straight through, and this is just a 5, I think, or maybe a 15 started like a few minutes before that, right? So the 15 does have a top wick. We then have a 1 minute with no bottom wick, no top wick, displace straight down, right? Take this liquidity. So what we do is wait for the retracement, which is why I got in over here, I think, or here. Either way, each of them are valid. Now, what I would say here is this is the displacement. So I want you to look at that, okay? This is what displacement looks like on a lower time frame. We have AMD on the 5, on the 1 minute. We have a higher time frame ERL respected. As you can tell, that's a fair value gap, right? We have that respected. Everything, all the boxes are ticked. Sweep higher time frame ERL. Come back to higher time frame IRL. Respect higher time frame IRL. Form normal middle time frame IFVG with a displacement candle, which is a strong push. Get in the trade, boom, win the trade, right? We closed a bit early as well, but yeah, this is a real trade. That's what a displacement kind of looks like, so train your eyes to see stuff like that. Again, real trades, right? Now, the entry precision, right, is the respecting sequence. So liquidity comes first. It reveals where the smart money is watching, right? So if we manipulate up or sweep the highs, we want to start looking for sells. Then we have the displacement, which confirms the intent. It shows who's in control, and the IFEG is just kind of like our entry point, right? The most precise entries that you will find come from respecting the order flow, right? Not rushing to be early and not waiting to be safe, right? That's it. So that was a pretty quick part, but who's watching this and thinks they can make it in trading? So if you believe you can actually do this shit and actually make it in trading, get some W's in the chat if you believe in yourself, right? I'm just keeping this hype going. I know slideshows are boring, so I'm trying to keep this as hype as possible, as engaging as possible, right? Because I know that these are fucking boring. I used to fall asleep watching these in class, right? So spam some W's. If you believe in yourself, if you believe you can make it in trading, spam some W's, right? Spam some W's. Let's see who actually thinks they can make it. If you think you can make it in trading, spam some W's. There we are, see? There we go, see? There we go. Keeping the hype coming. I'm trying to keep it engaging, right? Because I don't want to make this boring, but keep those W's coming. Let's get it, guys. Exactly. Everyone here believes in themselves. Excuse me. So, now, remember this. I'm giving away a 10k funded account and something else at the end of this lecture, right? So we're doing a giveaway at the end of this, okay? But now we're going to look over some more examples. This is where we bring everything together. Let's tie everything together from the top down, right? You believe you can make it, and I'm going to show you exactly how to do that. So let's get right into it. So, from bias to execution, the full setup breakdown. This is where everything we've covered becomes one flow. You're not looking for setups randomly. You're building a structured execution plan. You've got your daily bias, you've got the session timing, you've got your liquidity targets, you've got an IFEG formation, and you've got a precise entry. Your best trades are not found, they are built step by step with the exact same step by step like I've just shown you here. Someone said not boring when you're locked in. Exactly. That is facts, to be fair, Caroline. That was good, that. Just caught my eye. I've seen it. But yeah, this is what we're doing now, okay? Full setup breakdown. Your best trades are built step by step. You start with your bias. Or you guess you could start with your session timing if you only want to trade the right times. But you have your bias, you have the session, you have the liquidity, you have the IFEG, you have a precise entry. That is what gives you the best entry model, right? So the 4-step process here is step 1, your daily bias, your higher time frame liquidity levels plus the trend direction, and like ask yourself, where is price likely to deliver to today? What's the next daily candle going to do? And we said this in lecture 1, we are not looking at the macro trend. Obviously gold or Bitcoin is in an overall bullish trend. We're not looking at the trend. We're looking at tomorrow's candle. We're looking at today's candle, right? So you have your daily bias, then you get your session timing, then you get the ERL sweep, right? And then you get the displacement plus the IFEG. Simple as that, right? Now, here's another couple examples for us, right? My wife thinks I'm boring doing this. Well, when you're taking a first class flight to Dubai, she won't think you're boring. But yeah, again, another trade that I have actually took, right? Remember, these aren't just cherry picked examples. So here's a win, right? This is actually from yesterday as well, to be fair. This is from literally yesterday. But here's an example. So we had a bullish bias, right? We've then had an accumulation. We've then swept the ERL, right? So we've accumulated, pushed down, swept liquidity. Then if you zoom in over here, right? If you look at that, you can see we have a clear IFEG form, right? A clear IFEG. We inverse the fair value gap and then continue up, okay? Simple as that. We have everything I've just shown you ticked. Here's another example. This is from about 3 weeks ago, 2 weeks ago. We have a full TP here on GJ, another trade that we actually took live, by the way. You can see we accumulated here. This was like one of those examples that I showed you where we accumulated down a little tiny bit, right? We then pushed down, swept the liquidity, right? Formed a fair value gap, then inversed it, right? Swept the liquidity, inversed the fair value gap, and then continued up, right? Then continued straight up. Simple as that. Another entry model. Now the third entry right here is another trade that I've took. We have a nice accumulation here on a lower time frame, right? We then manipulate down to sweep the liquidity, inverse the fair value gap in like one candle here, but you don't want to do it in more than like 6. Then we go straight back up to this liquidity right here, which we take, which then leads us to retrace. We knew that was going to happen, so we took profits right here. Simple as that. These are all in the stream journal. These are all taken live in front of people. So it's verified trades, okay? Now, What's the next slide? When not to take a trade, okay? So now I'm going to show you exactly what a bad trade looks like. A fumbled IFVG. What does that look like, right? What does a fumbled IFVG look like? Something like this, right? I took this trade and this was a loss, right? This was a losing trade that I took, and like on a heart, whatever, I shouldn't have took this trade. And I said that after it played out, I was like, I shouldn't have took this trade. And can anyone tell me why? Let me ask you guys, the people who think they know how to trade, tell me why this trade lost. Tell me why I shouldn't have took this trade and why I shouldn't have scaled in. Tell me why this trade lost. Someone tell me why this trade lost. We had the AMD, we had the liquidity sweep, we had all the confirmation, par one thing, right? One thing that I haven't discussed today, right? One thing that I haven't discussed today. Someone tell me why this trade lost. Two fair value gaps. That's not the reason. That's not the reason. I don't think anyone's got this right. No one's got this right. Someone said time of day. Good go. But no, nothing to do with the second fair value gap. Nothing to do with the second fair value gap, guys. One person has said it. One person has said it. Tapped into an order block. Come on, Peter. I don't trade order blocks. It's not that. It's not that. There we are. There we go. Alexander and Zhao, you both got that right. It's because, right? Remember what I said, right? You know when we sweep liquidity, we're supposed to then retrace, right? When we sweep liquidity, we're supposed to retrace. When we sweep liquidity, we're supposed to retrace. So we swept this low here, right? We swept this low right here, which meant we had to retrace. So we swept the low, then I got in for a sell position, right? And then we continued up. So the reason this trade lost is because I got in right here where it had to retrace, right? And this is just by chance, but it had to retrace back up, right? It had to retrace back up because we took this low right here. We had to retrace back up, right? We swept the low, had to retrace back up, and just by chance, I decided to scale in here. And then it continued up, disrespected the fair value gap, and then eventually took the high, right? So we took the entry too early. We then scaled in and then lost it, right? Or too late. The entry was too late. Like when this happened, we should have just been straight to break even because of this little fair value gap here that was disrespected, right? So if I actually entered on time, we wouldn't have lost this trade, right? But also, I think there's a 5-minute IFVG right here, which we have disrespected on this close, which is where my entry was. But we took the low here. So the 1 minute had to retrace anyway, right? And that caught a lot of you off guard there. A lot of people didn't see that, so you still got a bit of practice to do. But that's an example of a trade that you do not want to be taking, right? That is when not to take the trade. So when we have an IFVG and the IFVG sweeps liquidity, you don't want to take that trade, okay? That's the learning point from this. So when the IFVG forms and sweeps liquidity, you don't want to take the trade, okay? That's it. Because the IFVG, using ARL and IRL, is the confirmation to go and take liquidity. But when we sweep that liquidity at the same time as forming the fair value gap, that's when things get a little bit messy and you don't really want to take that trade, right? Excuse me. Excuse me there, guys. I was supposed to put an example here, but I have not. But I guess I could show you as an example, right? I guess I could show you as an example. So what would a clean setup look like? Let's have an idea. Let's find an idea of a clean entry, right? I'd say this is a pretty clean entry. Oh. I'd say this is a pretty clean entry, right? We've had a nice accumulation. We pushed up. We swept all these highs over here, right? We didn't really take this, okay? But we had a nice little entry here. But then we swept, you can see here, right? This is another example. So I had this example for the liquidity sweep that I was showing you guys just about. So you can see we swept liquidity here and then continued up, right? The reason we went up is because we swept liquidity. But it's a clean entry regardless, right? It's a clean entry regardless. The entry was fine. The reason we went up is because we swept liquidity. There's nothing we could have done there. You know what I'm saying? And then a messy setup. What would a messy setup look like? Let's have an idea. Let's have a look. Something like this. Something like this. I'd say this is probably a messy entry. Because we got the IFVG, but you can see two things. One, it took so long to form it. We had a technical close, then came back in and then came up. And then we just moved down again and took the the entry there. We just had a complete consolidation to the upside slightly, right? That's a very messy entry. So this is what a messy entry looks like. And this is what a very clean entry looks like, okay? Now, you have to excuse me there. That's the first mistake we've made over this entire lecture series. Just one little slide, didn't have the examples on it. My mistake there, guys. Hold my hands up there. I forgot about that. But yeah, right. Now, let's hop onto the whiteboard. We're almost done now, guys. We're almost done. Remember, we're giving away a 10K funded account here just at the end. We're almost done. Just to go over a couple examples. But this is what the whiteboard flow of a proper trade looks like, right? So we're going to just write out these time frames right here. So the daily time frame, right? So we're going to have the daily time frame. You're forgiven. So we have the daily time frame here, right? Then we have the 4-hour time frame. And then let's just say we have the 5, right? Oh, excuse me. What on earth has just happened here? Then we have the 5-minute, right? So this is the entry flow we're going to be going over now, okay? So let's say we go onto the daily, right? The daily's done this. This is the most recent daily candle right here, and it's just took out a high. So if the most recent daily candle has just took out a high, what is the bias? Comment in the chat. Is it bullish or bearish? What is the bias right now? We're clearly in an uptrend, but we've just took out a high. Is the bias bullish or bearish? Is the bias bullish or bearish? All right, perfect. My camera has just overheated. My camera has just overheated, guys, so you're going to have to bear with me there. I'm still here, but there's no camera because it has just overheated. I'm giving away too much heat. Giving away so much heat, so much fire, that my camera has just disappeared, right? Now, one person said bullish. I don't know if they're just trying to act different. Right, okay. A lot of people said bearish. The bias here is well and truly bearish, right? We have to retrace the same thing we did here, the same thing we're about to do here, and the same thing we did the time before that, right? We take the high, retrace, take the high, retrace, take the high, retrace. Okay? So we took the high and we need to retrace back down. Okay? That's it. That is the bias, right? Now let me just move this. Right? Let's say we have the 4 hour. Right? The 4 hour. The 4 hour has took the high out, right? The 4 hours took a high out, formed a fair value gap, but it's just closed below the fair value gap. So we've just took out a high, formed a bullish fair value gap, and then disrespected the bullish fair value gap. What's the bias? What is the bias? What is the bias on the 4 hour? We've just took out a high. We've just disrespected a bullish fair value gap. What is the bias? Someone said mixed. Bearish. Exactly. Bearish. It's bearish. We have to continue down to this low right here. We have to continue down to these lows, right? So the daily time frame is coming back to the fair value gap because of ARL and IRL. And the 4 hour time frame is coming to the low because of ARL and IRL. So the bias right now is bearish, right? So what we'd want to see on the 5 minute, right? What we'd want to see on a 5 minute time frame is the accumulation, right? So we open the charts during like New York or London session, then we accumulate, then we manipulate up, right? We want to manipulate up, taking out a higher time frame high, right? Even if we do something like this, we come up, take out a higher time frame high, then accumulate, then manipulate up to take the same high out again, right? Then we form a fair value gap, displace through that fair value gap, then enter the trade right here, right? You know, and then if I just change the color of the pen just to show you the entry. So we enter here with stops above this and take profit at the most recent low, which would be this one, right? That would be the trade. And I know for a fact, 99% of the time, or okay, 80% of the time it would do this, right? So this is a full flow of the bias and the bias and the entry, right? And then what this green move here, what that would look like on the higher time frame is the daily coming back to that fair value gap and the 4 hour coming to take out that low, right? And then once it's done that, we can then rediscuss the bias, reevaluate the bias. But I've said this numerous times as well. Our goal with the bias isn't to catch the trend. We're not trying to catch an overall bullish move. We're trying to catch tomorrow's move. We're trying to catch the current move that's about to happen, right? And we do that by looking at liquidity and fair value gaps. You use liquidity on a lower time frame and it works, right? So apply the same thing on a higher time frame and it will work there just as well, right? It will work there just as well. Now, let's see if our camera works again. We gave it a little bit of a rest. Let's see if it works. Oh, we're back. We're here. We're live. Right, let me open the window just a little tiny bit. Right, just to let some fresh air in to keep the room a bit cooler. But that's a full walkthrough of the whole entry thing, right? I am back. So, do you now understand why you were losing before? Comment W. Again, building up this hype again. Spam some W's in the chat if you now understand why you were losing trades. If you now understand how to win, how to actually predict the next move. Get some W's in the chat. Get some W's in the chat. Keeping this hype coming, guys. I want you to break that W again. Spam the fuck out of it, right? The giveaway is just around the corner. Great. Okay. Now everyone understands that. Let's have a look at some of the results people have actually gotten from this strategy. So now you know how this strategy works, right? Let's have a look at some of the results people have actually gotten from this, right? So here's one case study, I guess you could say. Melvin, right? He's passed his funded challenge, got some winning trades on that as well. He's done. He's doing his thing, right? Then there's Mark as well. Just these are like some of the recent ones. There's Mark as well. He passed, got his first payout, right? You know what I'm saying? He's doing his thing. He passed a 25k, got a light $250, or 20k, sorry. Got a $250, so, you know, like 2.5% or something, right? So he's doing his thing, you know what I'm saying? This is a result he's got. And then there's Johnny as well. Johnny's got a 250k, a 100k, a 150k, so just 400k here, and then another 150k here, right? He has got over $1.5 million in funding, right? Just from this strategy alone. So I told you at the start of this call, I'm going to show you why you lose, I'm going to show you how to win, and then I'm going to prove to you that this does win. These are just some of the most recent results people are getting from actually using this concept, right? And then these are some trades caught today. So I left this. These are actual trades people caught today. And you can see the chat that they sent in. Caroline, you're here, right? You can see the trade that they put in. Trades people caught today, right? These are actual trades people caught today. Okay? Then the Zeng. The yellow means they're in the course, just to let you know. But these are actual trades they caught today. You can go and look in the free chat and you will see these chats. You will see these trades, right? Full TP. Just in the light little 1-to-1, right? These are just showing you some trades that are caught today to show that this works, right? Then there's just proof that they shared their entries before they took the trade. See? Beb and Zeng, right? Then there's trades caught yesterday. A few trades caught yesterday. So Maiden caught this one yesterday, right? Then there's Junior who caught this trade yesterday using GBP JPY, the 30-minute time frame. I took this trade. I'm in the course as well. Yeah, I know you, Steve. I know you, Steve. Steve is. I can confirm he is in the course as well. He did take this trade. You know, so there's people finding success after 2 years, right? Cannot recommend this strategy enough, and the best strategy you will find. So I've shown you, right? We're about to do the giveaway. It's just around the corner, guys. But I've shown you why you lose, how to win, and then proved that this is how you win, right? You've seen the logic. You've seen the trades. You've seen the results live, raw, and undeniable. This model works, right? So get some W's in the chat if you believe you can succeed with this strategy. Get some W's in the chat if you are succeeding, you're finding success, you know you can succeed. Spam some W's in the chat if you know you can succeed with this strategy. Let's see him. Let's get him. Come on, guys. I know I've asked for a lot of W's, but I'm trying to keep the hype. Try to keep the hype, you know, hyped. Trying to keep it hyped. There we go. That works. Exactly. Everyone here knows they can succeed with it, right? Everyone here knows they can succeed with it. So, very quickly, now you've seen all that, I just want to have a quick recap, right? Just a quick little recap, just to make sure everyone's left with the right stuff before we do the giveaway, okay? So, entry isn't guesswork, it's sequence, right? What used to feel random now has a system. Every trade starts with context and ends with confirmation. You're no longer hoping a setup appears. You're building trades step by step, just like institutional traders do, right? And the confidence that you need comes from clarity of the process. It comes from understanding the process. The blueprint is your bias, the ERL and IRL, your IFEG, and your entry, right? Bias to ERL and IRL, IFEG to entry. Eric Lake has made 2.4K in 2 days. Just commented that there, seen that. If you master this blueprint, you'll never look at charts the same again. You'll start seeing intention instead of noise, right? We are all about intention. We're not trying to see what's happened. We're trying to catch what's about to happen, right? And I've shown you exactly how to do that. The 4 elements of a precision entry: ERL tells you where, IRL tells you when to enter, AMD tells you why, and IFEG tells you how, whether it's a bull or a buy, or bullish trade, sorry, or a bearish trade, whether it's a buy or a sell, right? So, we are officially in part 6, which is giveaway time, right? The moment everyone's been waiting for. So the first thing is like up the fucking stream, get some W's in the chat. As I've said, learn a lot, bro, more independent, thanks. All good, man, happy I can help. Like the stream up and start spamming W. You already know the routine. If you've been here a while, you already know the routine. Like up the stream, spam the fuck out of W. Okay. Right, I'm gonna let everyone get started, so keep those W's coming, right? Keep those W's coming. So when I next look, I'm giving away the person I read out, right? What I need you to do is just DM me. The winner of this is gonna win a 10K funded account, okay? To use this strategy on. So get some W's coming. You already know what's coming. Like up the stream. Get some W's in the chat. We're giving away a 10K funded account in just a second for you guys right now. Keep them coming. I'm about to do them. I'm about to do that shit. I'm about to do this shit, guys. Keep them coming. Right, okay. There's a lot coming. Keep them coming. Keep these bitches coming. I want your thumbs to hurt, right? I want your thumbs to hurt. You gotta work for this 10K. Right? Making sure it's fair for everyone. Get some W's in the chat. Right? Got 10 seconds, right? You got 10 seconds. Just because there's a bit of delay on here. We got 10 seconds, right? 10 seconds. Right. When I look, so right now, this is me looking at the chat, okay? Mark, Bell, Misbah, Payne, Med, Caroline, Jose, right? This is me looking at the chat. So, now you know what me looking at the chat looks like, right? I'm going to look over here. We're going to count down from 5. And the next time I look at the chat, we're going to pick a winner, okay? So, oh, excuse me. 5, 4, 3, 2, 1, right? When I look at the chat, we're going to pick a winner, okay? When I look at the chat, we're going to pick a winner. The first name that I read, you need to DM me. So whoever's name I read, I need you to DM me on Discord, and I will give you the account, okay? GD, the initials, GD, right? Where is he? I've just lost it. GD, if that's you, if this is you, well, it's obviously you. But GD, whoever you are, message me, right? Message me. GD. I'm going to take a picture, right? GD. I need you to message me. Right, and now there's more, right? So I've announced the rebuild, right? And this is what I've been waiting for, guys. As you guys know, I've been announcing the rebuild for a while. There's a psychology module from a proper psychologist, right? Even if you don't use my strategy, you will benefit from that. There's a completely updated system. There's a Notion dashboard with tons of resources on. Everything you would ever need to become profitable. It's not just a strategy. You fix your mindset. You can become healthy with an actual fitness module by a real fitness influencer, right? There's a proper psychology module by a real psychologist. There's 8 new modules by me. There's a Notion dashboard, right? So, because of all these updates that are coming, lifetime access for the course is going away. I am removing lifetime access, and it will be replaced with a $250 a month option, right? So lifetime access is going away completely. You can no longer join for lifetime access, and it's going to be replaced with a $250 a month option, right? That is the only way you can join now. But what that means is you can no longer pay $500 and get lifetime access. The only way to join is $250 a month, right? But in celebration of the updates coming soon, in celebration of this whole entire thing, to celebrate the fact that it's been 1 year since I launched Fast Track Trading, and to celebrate the fact that we've hit 10k Discord members, I've got a very big announcement, right? So lifetime access is going away completely, right? But you can get lifetime access right now for just $197. That's right, less than 50%, more than 50% off. You can join the course for just $200, right? If you want a completely in-depth psychology module to master this strategy, if you want the mastery phase, which is some questions you're going to have after a few weeks of using this strategy, right? If you want all of that, you can get lifetime access for like less than half price, right? Instead of $500, you can get it for $200, right? The link in the description is now updated. Go and read through that, right? This is everything you get. You're going to get a complete Notion dashboard with everything you need, a modern journal, everything for $250 worth, a daily and private trading streams, which are like worth $200, $400 plus, right? They're just forever. There's a fast track trading strategy, which is obviously what I've shown you, way more in depth, $500. There's a psychology module for $800, a fitness coaching for traders worth $500 again, right? One-on-one call access, so you're able to have one-on-one calls with me directly, which is worth $200. You can get a private chat and direct support for just $300, which is worth almost $3,000 in value, right? If I was selling this one by one, this would be worth $3,000. But you can get access for just $197, lifetime access right now, right, until May 31st. So when it gets to May 31st, you can no longer get lifetime access. It then becomes $250 a month. Lifetime access is going away completely. So if you want to get in now is your time, right? And on top of that, this is where the biggest giveaway is, right? On top of that, right, you could win a mentorship. I'm giving away one full entire mentorship spot, my full hands-on one-on-one program. I sell this for like $5,000, okay? To enter, all you have to do is join Fast Track 2.0, the $200 plan, which is in the link in the description, in the next 5 minutes, right? I'll announce the winner of the mentorship on stream in 5 minutes. Simple as that. You already know what the mentorship does. You've seen the results, right? You can get funded in 7 days. Johnny, right, who has $1.5 million in funding, was once 50k down, right? Now he's made 12k in one payout the other week. He's on his way back up, right? 8 years of struggling, which is Mark. He struggled for 8 years. I worked with him for like 3 or 4 months. Now he's got his payouts. Now he's starting to make money, right? You could win a mentorship today just by joining in the next 5 minutes, right? But instead of me pitching you, I want you to watch this awesome video, right? Instead of me pitching you, watch this video right now. Most traders never make it, and it's not because they're lazy, it's because no one has actually shown them how to become a profitable trader. Fast Track 2.0 is the only program that builds your psychology, your trading results, and your strategy from the ground up. You've probably seen or heard of courses that promise you funding, teach you a few ICT concepts, and maybe even show you a couple wins. But none of them will show you how to build a system, backtest it, and manage your emotions to grow to a fully consistent, profitable trader. But that is exactly what Fast Track 2.0 is. You'll learn my full strategy rooted in ICT concepts but built for real-world entries. You'll rebuild your mindset with help from a licensed psychologist, and you'll level up your focus and discipline with help from a real fitness influencer. Designed for traders. This isn't just recycled content. This is a complete system to go from confused and inconsistent to confident, consistent, and on your way to getting funded and staying funded. But for the next 7 days, you can get lifetime access for just $250. This is built for serious traders, and if you're one of those people, I will see you inside. Click below. Right, so it's officially live, right? The Fast Track 2.0 sale is now live. You can get access to a psychology module by a psychologist and everything else for just $200, right? Grab it right now. The link is in the description. If you want to join, if you want to win the mentorship, click the link in the description, right? Go there, join the course for $200, and I will see you in there, right? $200 is literally a steal. It is a steal, right? So, join now. Payne's already joined. Payne has already joined. Caroline said totally worth it. Stephen Dowsett said £200 is a steal, right? Join now before you waste your time. You won't regret it, as Caroline is saying as well, right? And don't forget, one of you is winning full mentorship if you join now, okay? You're in the draw, right? So, what I'm going to do now is, the 5-minute countdown is about to start. We've already got the first few entries, right? The 5-minute countdown has started, right? It has started. You can see people are already joining. You got 5 minutes, right? And then after that 5-minute timer is up, we're going to do the giveaway live on stream, and whoever has joined, whoever wins, gets a free mentorship completely for free for 3 months. It's worth like $5,000, right? So on top of all the value, it's absolutely insane. Well, I'm going to stop there, right? And I'm going to show you some of the testimonials.
My name is Melvin from the Netherlands, and I found Josh in January. I immediately studied his material, I put in the hours, and yeah, because he's such a good teacher, I picked up very easily, and the community is very helpful. I ask questions, I put in the homework, and I got feedback a lot. And now I have the good news that I'm funded since a week ago, and all thanks to Josh, his course and his community. Josh is a very, very good explainer. And if you doubt joining, don't doubt, just do it, and you will see it for yourself. I see you in the community. My name is Melvin from the Netherlands, and I found Josh in January. I immediately studied his material, I put in the hours, and yeah, because he's such a good teacher, I picked up very easily, and the community is very helpful. I ask questions, I put in the homework, and I got feedback a lot. And now I have the good news that I'm funded since a week ago, and all thanks to Josh, his course and his community. Josh is a very
Hi everyone, I was excited to do this review for a while now. I joined Fast Track Trading around 3 months ago, somewhere in the end of December. I had a bit of time to go through modules, lectures, and learn a lot. Before I joined, I had a bad habit. I tried to jump into every trade I see in FOMO all over the place, trying to get every single little cent out of the market I can. And after I joined, I start reviewing the modules, I start learning, checking the videos, and most importantly, engaging with the community that we have. It's a very, very good community, supporting each other, giving feedback to each other. Now, after 3 months, my mental health really improved. My trading improved a lot. I was very, very skeptical in the beginning. Josh can tell you, I really did not believe that I can learn more, I can do more. I really thought this is what trading is about. I ended up losing left and right, to small wins then compared to the big losses. After 3 months now, I'm about to complete Funded Challenge. I have no more FOMO. I'm not jumping into trades. I'm choosing my setups. I know my rules. I set up my own. I can see where I can jump, where can I not. I see the news. I learned fundamentals. I learned discipline. I learned about rules, which are very, very important. After 3 months, I can very comfortably say that if anyone is planning...
Right. We've got a few people already. I don't know how many this is now. There's not many at all. Your odds are very, very high. Your odds are so high, right? We've got 1 minute left on the timer. I'm clicking here, refreshing, so no one's delayed. 1 minute left. If you want to join now and win a free mentorship, now is the time. We're going to be doing the reveal in just 1 second. 45 seconds left. Then we are doing the reveal, guys. Whoever's going to win this free mentorship is absolutely insane. Like Johnny, the guy I was showing you, who has $1.5 million in funding, he got funded with the course, struggled with his psychology, and now we work together. We've been working together for quite a while now. We just continue working together because he's just continuing to get results and continuing to want to improve. He's now got $1.5 million in funding. You've got 18 seconds, 15 seconds left, right? 15 seconds left, 10 seconds left. And then time is up. Right. There we go. You can hear the alarm. Right? And that is it. That is it. Officially, this is the list of people who are going. One of them, Glyn, Teddy, Zach, John, Daniel, Tom, Stacy, Oliver, Alvin. One of you guys are going to win a free mentorship on top of the course you've already just got at an absolute steal, right? So let's see. Let's see who wins, right? Whoever wins this, you are so lucky. And also, message me on Discord, right? You ready? Let's see who wins. No more entries now. No more entries. Oh, 2 people have just joined. 3 people have just joined. Oh, I feel bad, you know. For the 3 people who have just joined, Miguel, Misbah, and Gasly, if you guys can hear me, you have a free one-on-one call as well. Just because you're a little bit late, I don't want to mess people's odds up, but you get a few one-on-one calls as well, right? So 3 people have just joined there. Late, unfortunately. But we're ready to spin the wheel, guys. You ready to spin the wheel? Whoever wins, message me on Discord, right? And you will get a free mentorship, right? And what we're going to do here as well, just so you guys know this is legit, we're going to get them to show their progress and stuff, right? Ready to spin the wheel? You ready to spin the wheel, guys? Is my light on? Yeah, it's a bit dark though. You ready to spin the wheel? Let's see who's winning a free one-on-one mentorship with me right now. Ready? Stacy B. Stacy B. Are you here? Stacy, are you still here? My lighting is awful right now. Sorry about that, guys. Dead shadowy. Stacy, are you here? just to confirm, right? Stacy. Let's see. Where is she? Come on. I need her to verify herself here. Stacy, where are you? Stacy, you have won a free 3-month mentorship. Best self, babes. Yes, it's me. There we go. There we go. There you are. Stacy, all you need to do is just message me on Discord, right? Now, with this mentorship, guys, it's obviously going to be tracked, right? So no pressure, Stacy, but I want everyone to know this is a legit thing, right? So with the mentorship, I'm obviously going to name the woman or the person. I'm going to name you, Stacy, with your Discord username, message you, stuff like that. Get it locked in. Then when it's locked in, everyone's going to be able to know who you are, right? So everyone can see that it's legit type shit, right? But yeah, well done, Stacy. You actually, this is the next step. All you need to do now is message me on Discord and we go from there. But well done, Stacy. That is it, guys. I'm excited to announce this is officially underway. You can get lifetime access for $200 for the next 8 days. It ends on the 31st. Then it's no longer lifetime access. So on the 31st, you can no longer get lifetime access, right? At all, ever again. Okay? So the chance is now, the time is now. There's a full upgrade coming, a psychology module, a fitness module, everything you could ever want. Stacy, is that you messaging me? Oh yeah, GD's messaged me. So GD, you've won your 10k funded account. Stacy, yes, I am a woman. Stacy, you've won your mentorship. Message me on Discord, and that is it from me, guys. Join the course if you haven't already. It's an absolute steal. Once that's over, once this sale is over, we are locking the doors unless you're willing to pay $250 a month, which is very, very expensive. So I'll see you all in there. Have a good one, guys. This has been absolutely insane. Stacy, message me, and I'm going to keep you guys updated about Stacy once we've got it locked in, right? And that is it from me. Have a good one, guys. I'll see you all there.